Hey everybody, I hope you're doing well. Jeff Gibby over at MetaStock. Thanks for coming today. I hope everybody is safe and healthy and as happy as can be with, given the current state of things. Let's go ahead and read a legal disclaimer, should we? Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, and the information provided in connection with the company. All right, so we're going to talk a little bit about Price Headley. Price Headley is going to be speaking today. I would say that Price is somebody that we've been working with here at MetaStock for probably 15 years, maybe a little bit longer than that. When I started doing business development, he's one of the first people that I called, and he's been a great business partner. Some of the history that he brings, I remember back when we were talking to him, he was one of the top market timers of the day. He's been inducted into the Traders Hall of Fame. And one of the things I like particularly about Price is he likes to go in and talk about how there's like 4,500 different stocks that have opportunities on any given day, and some of them don't have opportunities, and some of them have opportunities, and really kind of he's focused his whole career. And one of the things that's always kind of stuck with me about what he likes to talk about is he wants to find the best opportunities and ignore a lot of the somewhat mediocre opportunities, and all of his strategies are built around that. Price is a great friend of mine, and somebody that I would say has been very, very important to my own personal trading. So he's definitely a true master, and I'm gonna go ahead and bring him on here. How you doing, Price?
Jeff, I'm doing great. How are you doing?
Doing good.
Yeah, you're looking good.
Do you like my COVID cut?
I love it. I love it. And you're bringing me into the new technology here. I don't do a lot of webcam-based webinars, so I'm excited to have you guys help me test this out. It says show my screen here, so let's see if this will actually work and I don't completely fritz on my end here. Let me see. Tell me if you can see my screen all right.
We can see it all right.
BigTrends methods for volatile markets. We certainly had our share of volatility, and that's what we're here to help people take advantage of. So if it's okay with you, Jeff, I'll jump in and share some things that I've been looking at using the MetaStock platform, and then I hope to answer some questions towards the end as well.
It's all you. I'm out.
All right, thanks. Thank you so much. And as Jeff said, Jeff's been a great personal friend as well as business partner and all the good folks at MetaStock. So thank you for having me on today, and then also brought in our BigTrends community as well. So great to see everybody. And we're going to walk through some things that are really unique about MetaStock that I really like to open your awareness up to new opportunities to use the BigTrends methods in these volatile markets. As you know, the last 2 months have been incredible, with the March downside, then April being the best month we've seen in over a decade in the markets on the upside. So it's all about taking advantage of those opportunities. And just a reminder, of course, everything I'm sharing with you today is for your information and education only. I'm not making any specific recommendation of buy or selling a particular investment here. Of course, you know that you are solely responsible for your own investment decisions. It's one of the reasons I love MetaStock, because it helps you make better decisions, helps me make better decisions, and it'll help you, I believe, as well. But you decide what's right for you. Ultimately, it's about, we're not providing personalized financial tax or legal advice to any individual. I use MetaStock here to help me decide how I want to focus, as Jeff alluded to, getting rid of all this noise that's out there, information overload. Once you become proficient enough as a trader, if you're in that very beginning stage, obviously you've got a huge bunch of information you can gather. And the key is, once you start to get clear about what you want to take advantage of in the markets, it's about minimizing the other noise that's just overload and not going to help you. That's where the word noise comes in. And really, as a trend trader, noise is your enemy. It's what you want to get rid of, the irrelevant, or worse than that, distracting elements that are out there. And what I love about technical trading in general is that basically it just gets back to the price action, drives your decisions because it shows you where the money's going in or going out. But these scans for me are the key that give you the ability to really reduce your focus and narrow your focus down to what really matters. And that's what MetaStock does so well across their exploration tool to take our toolkit, which you can see here is, I think this might be the first iteration that Jeff and I worked on. We've added a lot more. I'm going to add some other of the newer features that in the latest toolkit that doesn't show on this graphic, in the BTTK, as we call it, BigTrends Toolkit for MetaStock. We've got a lot of different tools in there. We can't get into all of them today, but the newest tool is our BigTrends Score, which I really am excited to share with you because that takes a lot of the dozen or so indicators that are listed there down into, okay, give me one indicator that'll show me what we're after. One of the first ones that I like to use, and I'm going to talk about some specific indicators as well as the BigTrends Score today, is I like to use the Larry Williams indicator called percent range or percent R. But I use it in a very different way, which is that a lot of people think that overbought is bad, and that stock's got to go down if it's quote unquote overbought. But what I've learned, and literally thousands of trade examples for me, is that overbought can be powerfully good if you have a very specific pattern that you know you're looking for. Because the institutions, let's face it, folks, are the ones that are driving the markets, not you and I as individual traders and investors. The institutions drive it. So when they see them, they want to buy it, they basically get to a point where they don't care if it's quote overbought. If they think that that stock's going to be the next home run stock, so they just keep buying it. And so what we want to do is the opposite of what you would expect. Was we want to look for quote overbought readings above that 80th percentile, the top 20% of potential readings on a percent R. Say you've got a stock at from 100 to 110 is the range. It's got a 10-point range. We're essentially saying we want that stock to be over 108. We want it to be in that 80th percentile or higher, or 109, 110, because the odds are it's not going to be stuck at 110 if it's in a strong uptrend. It's going to keep going up. And so the idea is that that range will actually change to a trend that keeps on having higher highs and higher lows. But just because it goes overbought is not enough for me. I need to also see that it's going to indeed go keep going above that. So what that tells me here is that if the institutions here are wanting to buy, they don't care when it first goes overbought. They want to keep buying. And if it closes above that first overbought bar's high, what that tells me is that they don't care. They're going to keep buying this thing, and you should be considering buying it as well. It's one of those leaders. It's the next Apple, the next Microsoft, the next pick your stock, Zoom, the next whatever the big play is on the upside for us. 2020 already has been loaded with some great wins, from as high tech and as Zoom to as low tech as Kroger on the upside. KR, where basically it's like in the pandemic phase in mid-March. We managed to get doubles 2 different times in Kroger calls in a matter of a couple of days. So it's one of those unusual markets where it's almost like that there's more uninvestable sectors. Obviously, a lot of reopening is going on now. A lot of hope is out there about the reopening of the economy here in the U.S. I think be cautious on that hope, but let the charts tell the tale and say, okay, yeah, it's been bullish here recently. But on the bear side, when things were plunging back there in March, things were going oversold, and guess what? They kept on dropping because the institutions were just saying, "Get me out." We now learned just a couple of days ago that even Warren Buffett finally pulled the plug on all of his airline positions during the pandemic. He was remarkably quiet about what he was doing during that market decline. Turns out he didn't buy as much stuff as people were hoping he would, and he was actually bailing out of the entire airline sector. So what that tells you is that, yes, the airline sector was plunging like a stone as air traffic total volume numbers in terms of how many people are flying it down something between 90 and 95% from where they were a year ago, which makes sense given all the shutdown. There's no place to go if everything's closed, and nobody wants to put themselves at risk. And Buffett's saying that sector is going to be changed for a long time based on how long it's going to take to recover. What I care about ultimately, though, is what happens in the coming days and weeks when I'm trading. So if it keeps going down, it closes below that first low, that's a tell that something's not right and the stock's likely going even lower. The institutions are going to keep dumping it. So here's like a kind of a classic %R scale on the top left. You can see Larry Williams did it on a 0 down to -100 scale. I actually changed it up to more of a grade school scale, but this is the original kind of when you plot a Williams %R, you'll get this 0 to -100 scale. I want to find the top 20% of readings. This was MasterCard when it was first going overbought. And the first time it went overbought here, you can see that that first high I would have targeted in here would have been right off of this 130 zone. The next bar, it closed above that. So when that white, greenish white candle there says we closed above where we opened, and it closed about 135. The institutions are in buy mode. The other thing that I add in here is that it's not just the breakout, because how many times have you seen it, folks, where you see a breakout happen, you miss it for whatever reason, or maybe you didn't see it at the time, and now you're going, the stock's a lot higher. What do I do now? I say wait for this this next little indicator that I developed called the retest, which says when that %R tests back into that overbought threshold, which on this chart's a -20, usually it'd be a +80 on my way I like to look at it, kind of a solid, top 20% of readings. That's where you can buy right here, right off the 14th, and you see that I've got a buy arrow there, and that low has to hold on a future close. So if that low, you see it coming in here, get my pointer right here, that low would take out, we would close below that red candle's low on the 14th, that would be an exit. So anywhere below that on the end of the day, I'm out. So it's just a daily chart. But you could do this on your intraday charts too. If you miss that window, you could actually wait for the next retest. So you might see it run up. You go, I'm on the outside looking in. You say, here's my next retest coming in when we have this kind of quick slam down here. You say that low has to hold on a closing basis. Notice the next morning, it's below there, but it comes right back up and closes above there by the end of the day. So that's why I use end of day closes for my exits on a bigger picture trend, so you don't get whipsawed by the interbar noise. MasterCard ended up being a really nice gainer for us over that next week as it popped up to new highs. Now, sometimes I buy in there on a retest, and this next one didn't do a whole lot, and then the one after that actually cost me a little bit of money. So if I lose, and I'm going to lose on some trades, I'm never going to tell you you're going to win on every trade. That's just foolish. What you want to know is, okay, look, that low had to hold, and look what happened. The very next day, it closed just below that low. So on the red down arrow, that's not a bear signal. It's just an exit of the bull signal that we got into. The fourth try was not successful after the first two were quite successful, and the third one was about flat. The fourth one was a slight loss. That's great trend trading. If you can have a couple of nice winners, have one loser, one break-even-ish trade, you're going to make a lot of money in trend trading. You don't have to be right every time. It's about how much you can win when you're right and how little you can lose when you're wrong. Oh, by the way, you see this next attempt where it tried to break out here, and you see that it would not count as a signal because we did not close above that spike high there. So you just stayed away from that attempted breakout. So that attempted breakout to a new high there was actually a fake out, couldn't get going, and it kept you on the sidelines, and you avoid a painful trade. Now, as we look at some of the other things that we've added in here, this is something that Jeff helped me with, and the MetaStock crew helped me with on our newest iteration of the BigTrends Toolkit, is what we call BigTrends bands, which BigTrends bands are essentially another way to visualize when it's moving above that 80% line. So it gave me a new way to see, is it trending? Is it stuck in between those blue bands, which would be range bound, or is it below the lower band, which would be a potential bear signal? Now, these days, I also would plot kind of a longer-term moving average against it, so I wouldn't even get possibly faked out on an Apple when it was trying to possibly break down there in the middle of that chart. You can see it was still in a longer-term uptrend, so we wouldn't even take a bear signal. But you can see the best parts of this trend here are going to be on the left side of the chart as we break out. You see the green really confirming just a really super strong trend phase, along with our BigTrends score that we'll get into, which actually says it's not just the bands that are good, it's a lot of our other BigTrends indicators that Jeff helped me to kind of synthesize into one broader, hey, you want to be buying through this phase and everything is looking bullish on the BigTrends indicators. So those green periods on the bottom part of the chart are especially good. And you can see the left side is obviously the home run on this chart, but there's even a nice little window there in that middle of May period and then a little bit in that August period. So it's like saying, okay, you know what? I use options. I don't just use stocks. I like to use options. If I'm going to use leverage with options, as you know, leverage is a double-edged sword. It can cut both ways. I've got to have the window where I say, okay, I know that that I've got the odds stacked in my favor. I never know that I have a winning trade or a losing trade, but I know that if I have the probability stacked in my favor, then I can play that game successfully over time, as long as I don't do anything stupid like putting all of my money into one trade. We always say, look, that you always want to trade to stay in the game for the long haul. So take small bits of your capital in each trade and let the edge of the system that you see here in MetaStock play out over time. Here's a more zoomed in period on Apple and another big trend phase. And now you can start to see the trend score up in the top part of this panel. And look at what's happening where you start to see that big trend score itself go into the top 20% of its potential readings, right? In this, what looks like extremely overbought phase, right? But that's where all the indicators, and Jeff will tell you a little bit more about some of the components of that, actually line up and say, yes, you want to be on board during this rocket ship phase for Apple, where you see that that's where you get strong trend, very little give back, and sure, eventually it's going to end, and you see there's an exit coming right as it starts to reverse back over. But the point is, there's a lot of speed of movement there, and that's great for options trading. So if you're not just a stock or an underlying instrument trader, whether you trade ETFs or indexes or futures or whatever, if you trade options, this can really help you to say, okay, only be really considering kind of aggressive options buying strategies when you're looking at that. And I'll talk about a more conservative option buying strategy. Now you see Apple, when we kind of zoom it out for a bit, just to see how many times has that kind of a phase happen. Not that much, but you can see the speed of movement is dramatic. There's another really consistent, strong one there. You can see as it just blasts off there in a late October, November phase, which of course would be a seasonally good time for tech in the market too. And you said, but there's another go in there on that next February period. So the point is, and yeah, there's a fake out there, and on the right in late April, it looks like it's going, then it quickly flips against you. So you might look like it's about to go, and then if it says, okay, it didn't, you get right back out. So a big part of it is not just getting locked in and saying, oh, well, it's taking off now. It should take off like those last big ones. Sometimes it doesn't, and it'll tell you when to hop out. What's great about the BigTrends Score in MetaStock is that it's not a black box. It allows you to see all of our big trends indicators over here that make up the BigTrends Score. So you can see it on the right from the Williams %R readings, which we look at over the last couple of days to kind of get that confirmation, the commodity channel index, the efficiency ratio, acceleration band, something I developed, John Bollinger's Bollinger Bands. In this case, that's one of the few that wasn't looking that good, along with the directional movement lines. But the ADX and average directional movement, the moving averages, everything looking pretty good here, or maybe a couple neutrals. That's going to give you a pretty positive score, which you can see in this case is 80, which 80 plus is what gets us into that really attractive, powerful trend phase for Apple here. And you can see where the buy happens. You can see where the exit happens over here on the left chart. And you can see that, sure, it doesn't catch the exact top, but that's where I would say, you know what any trend trader should be considering doing is saying, okay, catch a piece, trail your stops, and also consider taking partial profits on part of your position along the way. So you catch, for example, a Facebook here. You can see our first buy happens with the breakout of the big trends bands, which is happening over here with not just one, but two closes outside of that upper band. So we get that first setup there, and then the immediate follow through where it's showing you, yes, you want to be on board Facebook from a %R big trends bands perspective, right as it launches up into the high 150s. But then you see our green big trend score coming in place there about that middle of July, and we get the nice continuation into the latter part of the month with a nice gap up, which that gap is probably earnings related. And if you happen to keep any part of your position on in earnings, you hit a big home run of a double plus on an earnings trade or even before earnings, I always say take half of your profit off at a double or more. So that gets you all your risk capital back. It lets you focus on, okay, now it's just you're trading with the market's money. You've gotten your risk capital in your pocket safe once you can sell half of the double. Another Facebook period here. You see it's already been in that big trends band breakout above that upper blue band. You see we get all those other readings syncing up here from that late April, early May phase. And again, Facebook just on a nice steady run to the upside, popping about 5 points in about 5 days, just 6 days over that BigTrends Score window. So think of it as like a window of trading, or a door that you might walk through. Obviously, somebody slams the window or the door shut, you don't want to walk right into it. But if it's green and all systems go, you've got an opportunity to say the odds are on your side. You can do this with more than just the FANG stocks, of course. Here's a name like Alibaba. Isn't it interesting, by the way, when you look at the big trends indicators on this chart, they're never negative below that midpoint zero line. You see there's just all that white space down below, which said you should never bet against Alibaba on this chart. You should only be looking for buy opportunities. You can see it from the buy arrows as well. All green, BigTrends Score, no red. But even trying to pull back, it might go back to about flat on the BigTrends Score, but it never really goes negative in that entire window. So that's an eye opener too, because if you're ever in that gut level game of saying, I think that this thing's gone too far, I'm going to bet against it, this will keep you out of trouble. It'll keep you away from those gut level decisions that sometimes we want to be a hero and say, I'm going to call a top on this stock. Don't fall for that. Let the chart tell the tale. I know most of you as trend traders know that already, but this will just only allow you to take the right side of the trend, not try to force it. How about a downside opportunity? This was a prior phase for bonds. Bonds have been incredibly strong here in 2019 and 2020. But the reality is, back previously, you can see right around the time of the presidential election, we had gone up in the middle of that year, but then you can see, but before the election in 2016 and even after that negative phase, you can just see it on the chart in the middle as we're already breaking down. You think that the opportunity's already gone to the downside, and then we gap down after the election results, and we keep trending down for another month and a half into the end of the year. So the idea here is that you want to look for those windows of opportunity and then leave those other periods to everybody else. So the chop in between the bands, don't get tempted by it. Sometimes it looks like it works to trade in between those bands. It's not worth it. It's going to be too inconsistent, too unpredictable, too random. That's the noise we're talking about. Get the noise out of your trading and get the really strong trend into your trading. You'll find it's a lot easier and frankly a lot more fun when you're on the right side of the trend more often. And I find it being profitable more fun too. But bottom line here, here's a prior. I've been really bullish on gold here over the last year, and especially with all the bailout redux that we're going through here in 2020, which kind of you can see, it had to happen with just the incredible shutdown that our economy has gone through, and all the industries and companies and individuals getting money from our government, which is really from ourselves, or the taxpayers, that is, ultimately. But the reality is, what's another $1 trillion for government to spend on bailing out and propping up the economy? They don't care, but the reality is the gold market cares. Even if you think there's no inflation, gold's doing really well right now, and I project it's going to do really well in the not just months but years ahead as a relative safe haven compared to the potential purchasing power erosion that can be happening in the US dollar over time. We'll see. Bottom line is this chart only shows you downside on the left side. It was improving on the right, but not enough to give me a trade. And that's why I used to, if I just traded % R or one indicator in the past, I might have taken that trade on the right and said, okay, it looks okay, but it's going up, but not going up as fast as it went down when the red BigTrends Score confirmed that we had super strong trends. By the way, you can see that first phase didn't work. It just chopped around. It thought it was going to go, and then by the time it gave me the exit, I actually had a little bit of a loss on that a couple of weeks later. That's going to happen. So another good rule of thumb, if you're looking from an options perspective, is to say, okay, you know what, if it's flat on me, or worse than flat after holding on a daily chart, after holding it for 5 trading days, which is about a week, then flat or slightly against me, even after 5 trading days, I'm done with the trade. You can see on those strong down moves in the middle of the chart, look at any 5-day window, and you can see you're pretty much to the good until it finally flattens out there and starts to give that reversal on the exit signal. So the point is, time can also be a good guide for your stops, not just the price action alone. But you see, here's when gold was improving, and you see it went through one brief little attempted dip, and the 5-day rule would have gotten you out about the same time that the price stop got you out. Same thing with the first buy signal on the left, versus the strength really happening in the second half of this chart, really steadily trending up and pouring it on. You can just see the speed of movement in this last phase, when you get that big trend score backing up your big trends bands, that's going to give you a lot more potential on that trade. So what I also love about what Jeff and the team at MetaStock helped me do is it helped me, and by the way, this is from 2017 on GM. I haven't been as bullish on GM as this chart might look like, but this was a particularly good phase for GM as it relaunched and came back public after the financial crisis. Bottom line is this one was just like all systems go, and you can just see how the stock was going up day after day, and the big MetaStock will tell you, like, okay, the big trends indicator, big trend score indicators recently crossed above 80, price have broken above the current high, potential long signal. It'll even give you like, hey, aggressive traders might want to consider call options, one strike in the money, like give you some ideas. It's not going to give you specific recommendations, but it's going to give you some idea flow about, okay, if you're conservative, you buy it about 2 months before expiration. If you're aggressive, you might buy it one strike around the money. What I recommend doing from an options perspective is keeping it really simple. So when I launched Big Trends in '99, more than 20 years ago, I had done so by taking a lot of the tech stocks of internet stocks of the day and buying in the money options on them rather than buying the stock, rather than buying really aggressive out of the money options. I would just buy deeper in the money options, whether it's Microsoft, AOL, Dell, some of the brokerage stocks of the day, Ameritrade, night trading. I remember a lot of CMGI. They basically helped put me in a place where I could actually leave my job as the head of research for another big options firm that I've been at throughout the 90s and actually go and start BigTrends.com. So I have a fond place in my heart for this strategy, which is keeping it simple, buy in the money options, get rid of the time value as much as you can, put more focus on the intrinsic value. As a basic rule, I would like to see, you get at least 2/3 of your total premium be intrinsic value. So let's look at an example here. If we've got XYZ, we're bearish on it. It's at 56.6. Obviously, 100 shares costs over $5,000. If you're buying or shorting, but you see, instead, if we were buying like usually about a month out, example, buying like an in the money 60 strike put at $4.70, that would mean you'd have a right to sell a stock at $60. It's already worth $340 on 100 shares, and you're paying $470 for it on one contract controlling 100 shares. So 130 out of 470 is time premium. That turns out to be about 28% of the option. Just under 30% of the option is time risk. So that means if nothing happens, you could lose that 28% if it stays stuck at 56.60 at the expiration of the option. Now, in this case, you see, if we're right about the stock dropping and it goes from 56.6 down to 50, about just under 12% gain in the stock on the downside. If you're short, and instead you've got a right to sell the stock with a put. So now that down at 50, a 60 strike put's worth at least $10 or $1,000 a contract. You paid $470, so it's more than the double, 112% compared to 12% on the stock. So it's almost a 10-to-1 leverage type of a potential. So I don't have to have maximum leverage of 30, 50, or 100-to-1. What I want to do is take the flat or choppy scenarios to where they don't kill me and don't kill you. That basically, if you're betting on an out of the money option, if you buy a 55 put and the stock stays flat, you lose 100% of your 55 put premium at the expiration. Here, if the stock stays flat, we lose 28%. So right away, you've cut your risk down by a factor of 3.5 to 1 versus buying that at the money or out of the money option that could lose everything. So, you're stabilizing your results, you're stabilizing your experience as a trader to not have to ride those highs and lows as much, but still getting up to 10-to-1 leverage in this type of an example for a very reasonable move that could happen over the next month. Now, like I mentioned on Williams % R, it's been really good to me. Here was an example with Bear Stearns in the financial crisis, and I've done this on a variety of put plays in this market on the downside, particularly like I mentioned airlines. I mentioned a lot of the shutdown sectors when they were dropping in March. But bottom line is that that retest just that I taught you about with the MasterCard Bull example, it works on the downside too. Because when Bear Stearns finally confirmed, this was confirming in 2007, the stock was at first giving me a sell around 130. And then it gave a retest back around 128 on that second arrow on the lower chart. Rode that first move down from about 128 off that retest down to almost 100, give the final exit there about 110 on over about a 6-day span. So it's one of those where you're like, okay, this is how you can catch some nice speed of movement. That second retest right before the blue arrow exited was wrong. So the first one was good for about 30-point first drop. The next one, selling at 115, was knocked out at about, you can see actually more like 118 for about a 3-point loss. But the great thing about this is that it gives you a reentry. On the bottom chart, I've got an acceleration band in blue, and you can see the acceleration on the downside was happening on bear right before. I always thought it was interesting, by the way, that an investment firm would be called Bear anything. Bear Stearns, BSC used to be the symbol. It certainly lived up to its name. It was very bearish because it broke down about 70. And I made a mistake here. I often tell my folks, sell half of your position at a double. We got a double on it in a matter of a couple days, 3 days maybe, from 70 down to 60 or 55. And I thought, well, this looks like maybe we are due for another retest. So I'm just going to sell my whole position at a double. And it would have turned into like an 8-bagger. So that selling half of the position at a double is my preference if you're really going for bigger trend moves, and then keeping the other half that you now have that financial flexibility to not have said, oh, well, I missed my opportunity to ride the rest to a bigger downside. You see in this case, the stock dropped, as you can see, down to $2 was the offer. So it dropped to about $3.50 on that big gap down on the right side of the chart, where the prior Friday it was at 30. Next morning opens at like 3.5 because JP Morgan offered to buy it out for $2. They later raised their offer to $10, which is why it wasn't trading at 2, because everybody said it was too low of an offer. But the point is, the institutions were bailing on this thing. It was very oversold in the percent R in the top panel, the bottom 20% of readings below that 20th percentile. And that's what that percent R shows you, is that, yes, there's problems here. And you can see even on the left side of the chart, there's a quick second down arrow that did not work, and that one was not breaking the acceleration band. So this is where we get into stacking your indicators. The percent R was saying bearish on that second down arrow on the left side of the chart. That was wrong. It stopped out a couple of days later for kind of a brutal snap back up. But if you had the acceleration bands working as well, you see you'd only be in briefly at the start of 08 and then for that collapse. Now, one of the concepts that I always find interesting that a lot of people don't know a lot about is the idea of the efficiency of a stock move. I watched a great systems tester and stock market expert, Perry Kaufman, at a conference many years ago. I always give him credit for this indicator, but I kind of had a different way that he was talking about the concept of efficiency, and I was just looking at how could I code that. But he gave me the idea to say, you know what, if I was going to buy a call option, and say you've got the red, say your typical tech stock, it's got a 40% volatility, and say both these examples, you've got a red tech stock with a 40% volatility at the left side of the chart, starts at 50, goes to 60 by the right side of the chart. The stock's up, say in a month, say it's up 20%. Versus in the black, you've got some kind of a slow, steady consumer products, grocery stock, whatever you want to call it, that also goes from 50 to 60 over that same period. Which one would you rather buy a call option on? The tech stock with the 40% volatility, or the grocery stock with the 20% volatility? And say you're buying a 50 call, you're just looking at an at-the-money call option. You're going to make more money, in fact, about twice as much money if you pay half the volatility to get the same move from the beginning point on the left to the end point on the right, because they both win the same 20% in the stock. Yes, there's a lot of wiggles on the tech stock that are not there in the black steady low volatility kind of uptrend. But the beauty of this is that I don't care about the squiggles. I care about the end result, which is saying I would rather buy a cheaper option, have less risk, and actually more consistency in that. And this is why I call it efficiency that Perry Kaufman talked about. In that black trend is not giving back much. It's just grinding along steadily day after day after day. I wish they were all that steady, but the more you can line up the efficiency ratio, as I call it, with your trend, the better off you'll be. This is a prior example of the efficiency ratio compared to the acceleration bands on the top panel, efficiencies in green in the middle panel, percent Rs on the bottom panel. You'll see some overlap in these indicators for sure. In fact, that's what the BigTrends Score is sort of predicated on, is the more overlap on the upside or the downside, the better consistency of trend you should probably be in. But you see on that that big up move on the left half of the chart. The efficiency ratio moving up in the above that plus 30 percentile says this is going into a highly efficient uptrend. It has a retracement in the middle of March on that, back into that, just like a retest on percent R. It happens to be at the midpoint of our acceleration band, and then it takes off again. And it only ends about the start of May. That was right after like the reserve requirements got changed for silver by the exchanges, and they broke the back of the uptrend of silver by raising the margin requirements. That next move didn't have nearly as much appeal, right? Because the efficiency ratio barely got above plus 30 only for a few days, quickly got back below it, you're right back out. So the idea is that if you start stacking and aligning your indicators, you're going to be better off. That's where the BigTrends score comes in to be so powerful. And so, you know, the basic premise here is that, you know, this keeps on evolving within our BigTrends toolkit in MetaStock. You know, I have always been, you know, so pleased that Jeff and his team at MetaStock have been so responsive that when I have an idea to say, you know what, this is a lot of great indicators, but I'm talking about reducing information overload. What if we come up with a big trend score that just breaks all these big trends tools down into one core reading of how effective that uptrend or downtrend or no trend is? The other great thing is that Jeff's going to show you all how you can scan for this stuff, how you can find opportunities. And so what I want to do is actually make sure that if I've had any questions that I didn't miss them here and pop up real quick to see what people might have been asking about while I was talking, and then bring Jeff in here in just a minute. So actually, if you have any questions for me, definitely pop them in and I'll seek to answer them here. But Michael, welcome in from New Zealand. Great to see you. Over there coming in. I know it's a commitment when I see folks that are coming in from all parts of the world. I know probably very early in the morning in New Zealand time. But you know, this has come from me from 30 years of sometimes the school of hard knocks. You know, basically, you know, making those early mistakes. You know, of thinking I knew more than the market, thinking that, you know, I would eventually get bailed out or proven out by whatever my early view in the position is. The reality is, we all know, is that the market is going to be the one that's going to drive proving whether you're right or wrong. And so if you start fighting the market, you're getting yourself in big trouble. You're really better off to use tools like MetaStock, like the BigTrends Toolkit. I'm biased, but it's what, you know, it's been my life's work. To say, you know what, it's about getting down to the best of the best indicators, then to find the best of the best stocks or markets to trade, and then finding the best of the best option strategies that helps you to leverage that intelligently if you think that's appropriate for your risk tolerance. If not, you can still just trade the underlying stock or other vehicle you want to trade. But the goal is get that speed of movement, and thus you can actually increase your rate of return when you annualize that quick gain out over. If you make a quick gain in a week, book that profit, annualize that over 52 weeks, and look at it like, okay, that's the kind of turnover you want to have on your trading when it makes sense. I don't want to sell positions just to sell them, but when that window is closing, I want to say, let's move on out. So I want to bring Jeff in and to actually, and then I'll try to answer some questions too that might pop up along the way here, Jeff. I'd bring Jeff in to kind of have you, Jeff, as really the expert on the MetaStock software and how to really show people how they can empower themselves to use the toolkit to actually find these opportunities and truly find the big fish and leave the noise and the little ones alone to everybody else. So you can really focus on your best of the best opportunities using MetaStock software with the BigTrends toolkit.
All right. Well, I'm here.
All right. Thank you so much.
It's been a little bit quiet on YouTube. Scott says hello. It's good to see you. But that's about the feedback or the comments you've got. Sometimes if you're typing them in, I thought it might be interesting to ask you how you got started in this crazy business of trading.
Yeah, I took a little bit of a circular route in that my family's been in the thoroughbred horse business for generations. And so it's one of those things where when I was at Duke University and studying, my dad said, oh, well, you should be an equine veterinarian. Rather than breeding horses and have to ride the highs or the lows of the horse breeding business, why don't you be an equine vet and you can just get that steady money. And that started at Duke as half of the freshman class does as a pre-med major and was not liking it, and got into this trading contest, and I took the Warren Buffett approach. It was a 4-month paper money contest with about 20,000 college students, and all over the country. And the first month, I was in the bottom quartile. After a month, I would buy Gillette, Procter and Gamble, Walmart, whatever. And it was in the late 80s. So, it's just like, this isn't working. So I was like, I got to do something different. And it was actually a 4-month contest. 3 months in, I got my statement. I'm like, I got a month to go. I'm in the bottom quarter of all the participants. Time to change our strategy. And it's paper money, nothing to lose. So I started day trading in 1988, reading the journal and scalping names that I thought sounded like BS, of takeover names that I thought, okay, this is probably good for a one-day pop the other direction. Went from the bottom quarter to the top 1%. And of course, my studies suffered because I was reading the journal like a hawk, because I was so addicted to how fast things could move and how quick and how the knowledge was out there. And you just had to know where to look. That was before charts, before I knew about MetaStock, before I knew about anything related to stocks. And so then I was like, Dad, I'm changing majors. He's like, as long as you stay on the 4-year plan, we're good. But I was able to take that and say that was my kind of passion moment of saying, I know what I want to do here. I want to trade stocks and options. So it's more conservative than breeding thoroughbred horses. And people think that's crazy, but it's like, you know what? You've got liquidity. You can get in, you can get out. When you breed a horse, they have a saying here in Kentucky, you breed the best of the best and you hope for the best. I don't want any part of hope in my trading. I want to know that when it's not looking right, you get out, you move on, and look for the next opportunity. So it's been one of those never look back moments, and then running into you was so fortuitous, because I was like, how do I harness all this data that's like, your head's exploding with how much data there is, and say, okay, MetaStock gave me a really clear, easy tool to say, okay, run this exploration and take thousands of different optionable stocks and show me the best 5, the best 10, sometimes the best 1 or 2, depending on what criteria you want to plug in. And so that's what the toolkit, once you help me, Jeff, to line that up, has really helped me so much to just say, okay, now I can say, let me really put my research energy into the top handful of names, not so many that you can't count. And you know what happens if you've got too much information swimming in your head, you end up doing nothing, or worse, you get confused. So it really is, it allows us to get clear about what's an opportunity and how we can take advantage of it.
I have another question for you. That was really good. I appreciate that answer. I don't think I've ever asked you that before. And as somebody who was taught how to count pills by the U.S. government, I literally learned how to be a pharmacist as an Army reservist, and decided that wasn't very interesting. I understand your backstory a little bit better. Yeah. And God bless you. If you're a pharmacist out there, and or any type of a medical worker right now, we appreciate you, but you don't want me counting your pills. Right?
For sure.
Do you have any kind of, what are you looking for right now in the market, and just in general? Do you kind of think we're going to retest the lows? Are you somewhat bullish or bearish? I know it's kind of putting you on the spot a little bit, but what are you kind of looking for?
Yeah, I mean, we've been trading the upside of this move in the last month or so. I mean, the reality is that's where the charts have been pointing us in the short term, looking at it day to day, week to week. But in the big picture, I think you do have to be a little cautious, because, we're below the 200-day on the major, like S&P, Dow averages. The NASDAQ is not. The NASDAQ is leading. And we know why, because it's so tech heavy. Tech has not been hurt by COVID as much. In fact, a lot of sectors, as we know, have been helped in the tech industry because of the stay-at-home nature of technology, actually empowering people to stay at home. If you look at Zoom, which did well for us, or Facebook, Apple, Microsoft, they're all pretty much cashing in on this. But the other sectors are getting hurt, the other big indexes. So I think you have to be careful. You don't want to just say it's over, we're reopening, go buy. If anything, I'm from more of a contrarian standpoint, thinking, it's probably going to be pretty fully priced in, and nobody wants to think about the risk of a second wave or worse. The reality is it's probably going to happen. The question is, how badly is it going to happen? So that's where I think the market is trying to assess that. The market doesn't know how much that second wave could hit. But the reality too is that, of course, we got the Fed backstop, which a lot of people are hoping is gonna allow us to, just smooth sailing to the upside. I don't think that's really the case either, because the Fed's not going to just be buying every day just because they said they'll backstop the markets. They're going to try to save that firepower for when it needs it. The Fed recently kind of backed off of some of that daily buying activity from some data I was looking at over the last couple of weeks, compared to what they were doing, obviously, at the worst of it, March 23rd and just after. So bottom line is, I think you have to be able to trade both sides. Like I mentioned, some sectors like gold have been very good to us because I do believe that there's a logical place and a logical argument for, what is money? If you're putting, we're at 25 trillion in debt, we're going to be at 30 trillion in debt before the end of the year, some say, as for the U.S. government, saying, okay, well, what's another $1 trillion? Well, obviously it's significant, but it's hard to even fathom what that is. But the question is, gold is getting a lot of a lot of interest, because it's like, well, they're not making more gold per se, so they might pull a little bit more out of the ground, but comparatively, they're going to have this same kind of rapid expansion of the gold supply. So gold's been really good to us, really good sector. And Newmont Mining and Rand Gold, now part of Barrick Gold, and the GLD as well, have all been very favored trades for us and continue to be areas we want to look to buy those retests, buy those dips on. Great.
Thank you, Price. I'm gonna show your add-on. Is that okay?
Awesome. Yeah, I love it. I'm gonna hang around and watch. I always learn something from you.
Sounds good. I'm going to, let's go ahead and grab this here. Go ahead and show my screen here. Get this out of my way. Okay. And there's another picture of Price on top of a picture of Price. Anyway. So I am very, very pleased, just like Price is, with this. Just to give you a little bit of history, back when we wrote BigTrends Toolkit, the first version, I wrote it by myself with a little bit of just technical, here's how you do this type of support from William Colson, if you know who he is. And it was a huge success. We ended up releasing a second version and a third version of it. And as a result, BigTrends Toolkit has always been a very, very favorite add-on of mine. I've put a lot of my own effort into it, and Price was very a lot of the stuff that we came up with for version 1 kind of defined for us what a good add-on looked like in terms of the way commentaries were written and that kind of stuff. Very, very proud of this product. Price worked really well on it. I did most of the coding initially for it, and then the second and third version we brought in the professionals to put it together. But all in all, what it's going to actually include is, let me go ahead and try and advance the slide. It's supposed to be going forward. Is it's going to include a good number of the indicators that he uses, a good number of this. Here's a list of kind of the methodologies that are included, and the ones that have been evolved and things like that. And certainly, I'm not going to have the ability to talk to you about all of these, but one of the things that as Price was kind of alluding to, one of the things that he wanted to do is kind of create something that was very, very simple, that kind of took really the best of the best. So some of the old systems that are in there are awesome. I love the efficiency ratio indicator. I love the acceleration bands and the Bollinger Bands. But what we wanted to do, in addition to all these great methodologies, is just put together a method that puts everything together for you. And so in total, there's about 17 system tests, 17 scans, and 17 expert advisors. But I'm really going to show you kind of how one of them works. Okay. And certainly I would recommend that you get BigTrends Toolkit. But I'd also recommend that you get Price's book, which is BigTrends, I believe, in Stocks and Options. Should remember that a little bit better, but he can correct me if I'm wrong. I believe it's Price Headley's Big Trends in Stocks and Options. Let me know if that's completely wrong, but if you Amazon that, you're probably going to find it. So we are looking at Apple. Coincidentally, Price and I didn't talk about the same charts that we're going to talk about, but I was pulling up Apple. I was kind of looking at this a little bit earlier, and you'll notice right here we've got kind of the envelopes here, what we call the big trend bands. And in addition to that, we've got kind of a little bit of a histogram type of an indicator that kind of looks to combine all of Price's favorite indicators. So if we're looking at this right now, we're up above the band, so we've got a BigTrends score of 70. And this is a feature that we call in MetaStock, we call this the expert advisor. But so we're looking at the very, very current day, a BigTrends score of 70. It goes from minus 100 to plus 100, I believe is kind of how we put together the scoring. With BigTrends score, what we're looking for is, if you look right here, we're looking for at least an 80 to confirm an underlying long signal, and minus 80 to confirm an underlying short signal. So we're very, very close to triggering a setup for, if we're just a little bit more bullish, we might have a setup on Apple today. We're at a 7 out of 8, and we're looking for 8. Okay. You should look for at least 80 to confirm an underlying long signal, minus 80 to confirm a short signal. I just said that, didn't I? Okay. For long positions, traders can look to trade above a previous bar high to confirm a long trade. Okay. Here's kind of the indicators that we're looking at. So we're looking at Williams percent R. We're looking at 2-day Williams percent R, the commodity channel index, the efficiency ratio, acceleration bands, Bollinger Bands, ADX, directional movement, moving averages, and then the 2-day directional movement. So basically, it's just combining those. We're breaking down this score for you so you can kind of understand what's going on. And then it just kind of talks a little bit more about what Price is doing. Back here in the past, you can see, and I'm just going to kind of zoom into this last signal that we had on Apple, just so I can kind of dissect through with you exactly what's going on. Right here on hovering over the date, December 19th of 2019, we issued this, what you'll see is a setup on the chart, okay? So that's denoted by this triangle, or diamond, this green diamond. And basically that just says, hey, we've got a BigTrends score of 80, which is what we're looking for. If it's a minus 80, we'll give you a diamond, but it'll be above the chart, it'll be red, and it'll just say it's a minus 80, okay? So what we're looking here for the setup is we're looking for 80. What we're looking for as a confirmation is we're looking for on the very next day to trade above the high. So you'll see that that did happen. The very next day, we had that kind of confirmation above the high of the bar. It traded above that, issuing a strong buy signal for us. And when that happened, basically, it just tells you, it does that breakdown again. The BTS indicator has recently crossed above 80, and the price has broken above its current high. This indicates a potential long signal. Okay, and one of the things that I love about particularly the methods that we put together with Price is how specific he gets in terms of kind of giving you ideas on how you should take or could take advantage of this. Not should, could is a much less legal word, but giving you ideas in terms of how you should or could look at taking advantage of this. So if you're looking at buying this, you could look at a call option 2 months before expiration. If you're aggressive, you could look at this. If you're less aggressive, you could look at this. And it also is very, very specific about when when you should look to exit the position. Okay. If I go forward a little bit, it's going to kind of give us some more information. It'll give you, looks like I need to load a little bit more history into this chart. This is what these our errors are giving us. But right now it is telling us what the current stop is, and that'd be 292.75. So as long as you're in this trade, which is working really good, it's going to have a current stop that you're going to kind of have on Price. If that stop eventually gets triggered, it's just going to tell you, okay, it's time to get out of that trade, and it'll tell that'll be denoted by this exit signal on the chart. I'm getting a little bit of an error here, but I just need to load a little bit more data in my chart. It's not important enough to do right now. So that's a breakdown of how that works and how that system is. One of the things that we did for 3.0 is we put together this kind of scoring system. And we actually implemented that across all of the different methodologies. So if you were a big fan of the acceleration band systems or the efficiency systems, those systems are really, really good. You'll also be able to see how those work and what the score is for the other indicators without even having to apply them. It's just all broken down for you in all of the systems. Okay. Another thing that we've kind of done is, and this is a full implementation into MetaStock. So if we wanted to go in and run an exploration, the exploration allows me to go through and ignore all of the crappy opportunities, so focus on what has an opportunity. So I'm just going to go ahead and kind of show you how that works a little bit. What I'm going to do here is I'll just bring my, we call this a power console on screen, but I'm going to go ahead and click on, we've been working on charts. I'm going to go ahead and click on Explore. And Explore is kind of similar to, it's what we call scanning. We go and we look for opportunities, we explore for opportunities. I'm not sure why they called it Explorer. I like to think that the person that named it liked Indiana Jones quite a bit, maybe. But we call it the Explorer. I'm going to go ahead and click on that. And when I do, I'm going to come down to these BTT3. You see that there's a setup and that there's a trigger. Okay, so the setup, if we're running the scan, what we're looking for when we're looking for a setup is we're going to be looking for one of these triangles to appear on the chart. Okay, if we run the trigger, what we're looking for is, instead of for having, so in the case of a setup, we'd be looking for everything that had a setup today. We could watch it tomorrow and see if it triggered by going above the high. Okay. If we're looking at something, the trigger, then we're looking for the actual high to be broken today and the setup to happen yesterday. Okay. Typically, you probably want to look at the setups because that's going to give you an idea of stuff you can be looking at during the day. Okay. I've run them both, and we can certainly run them both. I think I'm just going to run the trigger right now. So if I go in and I'll hit the BTT3 BigTrends Score trigger, and I'm going to come down here. And you can scan all of the optionables. That takes a few minutes. I'm just going to run it against the S&P 500 to give you an idea of how easy this is to work. Okay, so I'm going to go ahead and start the exploration here. Okay, it's going to go ahead and load over here on my other screen. I'll bring it over here so you can see it. Now, keep in mind, right now, I am doing this off of local data, or not local data. This is off of internet data. Okay, so it's grabbing the data at the same time that it's grabbing however much data that it needs. It's also I'm broadcasting both my screen and my video and my face. So the point I'm trying to make is this is running through all 500 of the stocks actually fairly rapidly right now, but it's going to go even faster if you're not sharing your video screen and don't have kids taking Zoom lessons in the other room and things like that. But it is running actually pretty fast. This is certainly way faster than looking at 500 charts. It'll be even faster for you when you're doing it. Okay, I'm hoping it comes through and finishes. So I can just show you the results. It's about 99.6% of the done. And typically I run scans against all of the optionables. I like to download the data because it's like done. But it does require that you store data on your hard drive to do that. So in any case, let me just do something real quick while this finishes. I actually clicked myself off of YouTube page. I just want to be able to see if there's questions coming in while we go here. So give me just a second. I'm working on the other screen while this happens for you when you're doing it. Okay, there we go. Okay, and there's the questions. Okay, good. All right, so it's about 400, and it's almost done. It's rejecting about 99.6%. Okay, that's 99 out of 100 stocks I don't have to look at, right? I just want to be able to focus on what has an opportunity. I've run this scan already, so I'm not surprised that Facebook came up on it as a confirmed entry signal. But I was surprised that Price was talking it a little bit. So we can go ahead and open that up as a chart. We can go ahead and do that. And we'll go ahead and let everything load in real quick. I'm going to go ahead and apply the proper template for this. So the template's just going to throw all the indicators on there and that kind of stuff. What I'm looking for is all of these BTT3 systems. I'm just going to throw the BigTrends Score on here. We'll go ahead and do that. You can see I've been using MetaStock all day. Here's what we call an alert. It's basically telling us there's a log opportunity. View the commentary for details. So I'm going to go ahead and click OK. That pops up. If you're watching a chart and you get a buy condition, that'll happen right then. Okay. Right here, just to kind of look at Facebook a little bit, what we had is we had a setup yesterday followed by the trigger today. So we traded above that high. it went ahead and triggered in. And then you can kind of see how that score is breaking down as well. We already read through kind of how the expert advisor is going to tell you kind of what you could look for in terms of taking advantage of that as a trading opportunity. So I don't need to necessarily read that again, but it very quickly we were able to take off 500 S&P 500 stocks, and we came up with 2 that we can go in and see if we want them, see if we like them, see if we want to buy them. Okay. The other thing that we include with MetaStock is the ability to test these. So I can come in here, and with any of those methodologies, I want to be able to focus on what methods work and what stocks they work really well on. Okay, so again, what I want to be able to do is ignore all the noise and go in and find what works. So I've ran a system test already on a group of stocks. I don't want to run it right now because I just want to show you the report right now. We don't have to waste the time in actually running it. I'm going to go ahead and go to the report though. With this report, I did the S&P 500 against the BigTrends Score system. So I'm going to go ahead and click on View here, and we can kind of show you exactly how this works, how it looks. What this is telling us, I'm going to go ahead and sort it based on net profit. And now what I know is exactly how well it worked over all of the S&P 500 stocks. And I can also focus on the ones that it worked best on. So if I'm looking here, if I had taken every single trade gap issued last year, for example, and just bought the security, so I'm not buying instrument, I'm not buying options now, I'm just testing buying the security, we would have made about 52%. Pretty good without trading any leverage. 2 trades over that past year, so only 2 trades, we made a 50% gain. Both of them were correct. In other words, we didn't lose money on either one of them. So our average profit versus our average loss was not applicable. We didn't have any losers. Okay. The next best performing system was Halliburton, followed by AIG, followed by Marathon Oil, followed by Norwegian and Royal Caribbean Cruise Lines. So kind of get an idea of how that works. Again, what this allows me to do is be able to focus in and say, okay, which ones are best or which ones worked best over the last year, and in terms of giving me a signal. So let's see. And so that's pretty much what I wanted to show you. This has been a plugin that's been a very, well, it's been one of the most successful add-ons we released. Again, with Price's pedigree and with his history and the fact that he's a top market timer, the fact that he's out of the Traders Hall of Fame, it includes really tons and tons of his research. And he's been very generous with sharing that. You get 17 of his expert systems, you get 17 of his cans, you get 17 tests, and all of his custom indicators that he uses in his systems. Normally, it's only $50 a month to plug that into MetaStock. So $49 per month is what you pay. What we want to do is normally with these webinars, we'll do a little special offer to kind of encourage you to get started. And what we're going to do is we're going to give you, if you buy 1 month, we're going to give you your second and your third month for free. So that's like $49 for divided by 3 to play with this thing and literally play with some really good trade methodologies. So I'd encourage you to try that. It's $50. If you need MetaStock, it is an add-on for MetaStock. So if you don't have MetaStock already, MetaStock's kind of like the engine that runs everything. I'll just give you a little like elevator pitch for MetaStock. MetaStock has been rated #1 in its price category every single year for 26 years in a row. I mean, just like that. Think about that. So if you need MetaStock, we can get like either a free trial as part of this offer, or we can have you pay for a month of MetaStock and give you 3 months, which is probably the easier way to do it. But either way, whatever you're more comfortable, you can do this for 3 months. If you wanted to add like a MetaStock DC subscription for 3 months, it would be $59. And that would allow you to get 3 months of the best rated software in its price category for 26, 27, 25, 26 years in a row. Would also allow you to get one of the best add-ons that we've had available, one of our most popular best-selling add-ons. So I'd encourage you to try it. If you don't like it, you just cancel. And really, there's not a lot of risk and reward. And it's not like the market there. So give us a call, 800-882-3040. We have people that are online right now that can answer your phone, or you can chat online with them at metastock.com/saleschat. So let me see if there's questions that we have. Ooh, Juan Wara, thank you for the question. Does it work with the Forex market? And so, what if Price is still here? It will work with the Forex market. Generally, anything that we do include Forex with all of our data packages with MetaStock. Price specifically, do you know what experience do you have with the Forex market?
Yeah, Jeff, and I appreciate the question, Juan. It's basically any market that has consistent trends to it. If it's a lot of chop and a lot of noise, I tend to stay away from it. But if you find that there are trending phases in any market that you look at, Jeff, it's going to be good for those trending phases. It's just that obviously the more choppy a vehicle is, usually I end up staying away from those comparatively. So you have to just pick your particular Forex instruments and pairs that you're looking at appropriately, right? Based on that. And the great thing about it is with MetaStock, you can actually test these indicators against Forex, and it'll tell you which of those pairs, which of those currencies, if you're going to trade currencies, which one should be the best based on the system on the past. We all know that past performance doesn't guarantee future results. So you always have to keep it in mind that sure, sometimes you'll go through phases where it's not working as well as it should or better than it should. But the idea is that it gives you a guide by using the testing capability of the software to actually show you which pairs you might have thought you should be looking at the dollar versus the yen, but maybe you should be looking at the euro versus something else, right? So the point is, yes, it does work, and it'll help show you which are the better choices based on history, which I always find an important guide myself.
Well, it's also good. I think it's a good idea, and I just thought of this. But if you reach out to us, Juan, we can pull a few charts for you for the Forex you're interested in. We could run a system test or two, kind of send you the results. So just get in touch with us at the metastock.com/saleschat, and we'll get in touch with you. Keith, thank you for your interest. I'll have somebody reach out to you to help you get set up for that. So I appreciate your kind of copying your chat, your email address there in the chat. I'll have somebody reach out to you, and we'll get you help. Michael said, thanks, team. If only hindsight was foresight. Well, yeah, I guess, right? It's always easier to trade those on the left-hand side than the right-hand side. Is that right, Breeze?
Well, sure, Jeff. I guess the thing is it's about having the confidence to know that you can trust yourself when you're in the heat of battle, folks. And that's what MetaStock helps give me, is it gives me that conviction to say, I should follow this buy signal, this sell signal to its conclusion rather than prematurely bailing on something just because it had a bad open. And that's what you've got to get yourself away from, is being too reactive to something that might not be what your strategy says you should be doing. So it keeps you focused on executing your strategy rather than moment by moment price volatility. That's really the title of this, was how to trade in volatile markets, but really it's about how to trade through volatile markets to get to your goal, to get to where you want to be, and not overreacting away from your system. It's taking your emotions out and allowing your rationality and the system tests and the history to be a guide to help you get to a better place in the future.
Yeah, absolutely. And to me, it's interesting how well the methods work over time, too. So, it's no guarantee that they're going to keep working, right? But it's so much better to go in knowing why you're getting in, where your stop loss is, how you're going to get out if it goes against you, why you're going to get out if it goes for you. So many people are just kind of playing it dumb, like, okay, well, are we going to go up or are we going to go down today? And they're trading out of fear right now. Well, maybe not as much right now. We'll see though. But I always find that it's good to have a game plan. Yeah. Wow. Okay, great. I didn't have one on here. Okay. Sure. Okay. All right. Thank you, Greg. All right. Price, thank you for coming. Any final thoughts for us?
Oh, just thank you, Jeff, for having me. Just say, folks, it's all about staying proactive. We've alluded to a lot of things, but the idea is that you've got to have a guide that gets you there, and that's why I think the MetaStock software, especially at these prices. I've actually, folks, been telling Jeff this is way too low of a price for what you're getting. But you know what? We've felt so good about the great response that we've had at it, and that it's like, okay, I'm willing to stand behind that. You know what? If it was only that you got what you paid for, then this wouldn't be that great. The reality is you should be paying thousands of dollars for something this good. But basically, I've been in the game for 20 plus years at BigTrends. As Jeff mentioned, MetaStock in the game for more than a quarter century, 25, 26 years, and counting, actually, with all those great reviews they continue to get, winning their categories in all the various software reviews. So bottom line is, this is an insanely good buy for something that will point you in the right direction and allow you to get focused on the top opportunities and get rid of a lot of the noise in your trading. So thank you, Jeff, for having me. I hope to see you again soon.
It's always good to have you. Well, you're welcome anytime. Anytime we can get you in here.
My pleasure.
I want to also thank everybody for coming tonight. It was good to see you. Stay safe, stay healthy, and we will see you at the next one. Give us a call, 800-882-3040. Signing off.